So this, let me just go for the recording. Let me go through this whole package. Katie has access to this package for anybody that wants it. And it's basically the mastermind model that we used last month. And it has the schedule, the timing, the different questions in it. It talks about where the model came from. If you're the kind of person who wants to become a serious student of the model, there is a book that, oh, here it is. This is the text that the model is based on, The Art of Focused Conversation. And so the model itself isn't in there, but the model of walking through the fact-based questions and reflective questions, interpretive, and then decisional. And there's a bunch of brain science that kind of underlies that thinking. And that comes from this text. The rest of the model I've just created in partnership with the group that I've been in since 2005. So, and I've been in my own group for 15 years, but I have launched other groups that I just got going. And then we do groups here. We run groups for people that don't want to put together their own group, and try to put them at a price point that makes sense for people. But what I always say is that it's not something you need to pay for. You just have to do the work to find 5 other committed people. And so here's the model, here's the timing. And in the last page, I added, here's what you need to do to put together your own group. You need to find 6 to 8 peers. And they should be people that you share common goals with, but also diversity of experience. Like that, sometimes in my group, one of the things that has really propelled us forward is when we decided to invite a couple people in who were way beyond where we were, and it was so uncomfortable. It was so uncomfortable, but also really good for us. Like some of the things that have been workshopped in my group are things that I just wouldn't have ever had access to. So I invite you, if you're going to move forward and pull yourself together a group, think about who might make you a little uncomfortable in doing that. You don't want it to become you don't want it to become a bitch session. You don't want it to become a commiserating session. You want it to move your organization forward. We do ours monthly. A lot of groups do theirs monthly. I've had groups that did it twice a month. And especially in the beginning, the more you can jumpstart the cohesion, the better. So I really think the best model is a commitment of twice a month for 6 months. And then you can kind of scale back to once a month. Somewhere along the line, my group, like 7 or 8 years in, I guess, we decided that once a month wasn't enough, but we didn't want to commit to more than once a month. We're all busy business owners. And so what we did is we decided that twice a year, we'd go away for a 4-day retreat, and we would all cycle through in that 4 days. And so it's twice a year, 4 days strategic planning retreat. And we each have a session. There's 2 to 3 sessions every day while we're gone, which is just also a kind of a crazy commitment, but really impactful. So I share that story to say there's no one thing that works. What really works is just doing it and then iterating what works in your group. It will begin to have a life of its own and a personality of its own. I've seen groups do this in an hour and a half. We took 2 hours and it was tight in 2 hours. I don't recommend doing it in an hour and a half. If you're going to do it, go all in and take the 2 hours. In terms of length of group, Uh, I've seen groups last a year, 2 years, 3 years. I really think it's best to go in for a couple of years. In after 1 year, you're still just really getting to know each other. We haven't had the same people in our group for all 15 years, but 2 of us are original members. And wow, when I have a problem with my company that I need help with, I don't have to go into any backstory. These people just know my business. They know where it was. They know where it's going. And so we can just really dig into the specific problem. So I personally feel like that kind of length, if you've got the right people in the room, is super valuable. I've done these in person, I've done them on the phone, and I've done them in Zoom. You know, I'm old fashioned, so in person is always valuable, but we're busy. And so to me, video conferencing, like many of my groups were done via video conferencing far before the pandemic. And it's, you can invite people from other communities. So specifically like T, for you, I think it would be super valuable for you to have other people in the education space that you are in, but you don't necessarily want to do it with somebody in your own backyard, because then there's proprietary, or, you know, if you're going after the same funders, I think sometimes we might not want to divulge things with somebody that's down the street from us. And so video conferencing allows us to go find people in other parts of the country where things are just done a little bit different. And it's, you know, back to the, it's good to have somebody that you have some common goals and dreams, but it's also really good to have diversity of experience. And that's all across the board, diversity of experience. So here's the why, and I just answered the why about the questioning model. I have sat in so many mastermind sessions, and like there's gurus that say they have mastermind sessions, but they're not. They're really just teaching. I am a huge believer in this peer-to-peer mentoring concept. I think it's so much more powerful than, I mean, teaching is important. I'm not saying teaching is not important, but I'm a disciple of this questioning model. And so if you're going to go do it, that would be my recommendation. There might be some people in this room who see equal value to other modalities, which I totally respect, but I'm opinionated. So, commitment. So here's the last thing I think about creating your mastermind group is, especially in the model, in the way that we have the model, only one person's up every single time, right? And so it's really easy if you're busy on a certain day and it's not your time, it's really easy to not show up. So you have to have people in your group who are committed, just as committed to your success as you are committed to your success, because it does not work when people just randomly don't show up. I mean, life happens, right? But in our group, we have a written commitment. And if people miss more than 2 a year, we bounce them, because, you know, just because our time's valuable, their time's valuable. And it sounds harsh, but you know, our organizations are important. So we want to be spending our time with people that value that as much as we do. So that's just kind of the basics. I wanted to answer does anybody have any questions? Like, who's thinking about pulling together a group? Or any of you, have you decided, yeah, I think I'm going to pull together a group?
So I have a group that's paid and it's different, and it makes me want to change the name Mastermind to something different. But I do think that I would love to have a group that did this, or that at least we get to like do some blend of personal and professional development, and then do 2 retreats a year where everybody's in sort of the hot seat. Or what was your friend, what did they call the other, not hot seat, but
Sweet seat.
yeah. So but definitely, and I utterly agree with you that I think the peer-to-peer mentoring, and that we all have our own internal answers, we just sort of need some help from peers to get clarity, is probably right, rather than direct learning, because everybody's trying to run their own business or do their own thing, and there's just a lot of wisdom in the group. And so I don't think there needs to be one person top down teaching per se. So it makes a lot of sense to me.
Yeah. I'm also a big fan of passing facilitation around. So in our group, we take turns. Everybody takes turns facilitating. And, you know, for some of us, we're facilitators in what we do already. But like one person in my group, she owns a print shop. You know, facilitation is not her. She runs a big manufacturing company. Not her strong suit, and it scared the heck out of her to facilitate at first. But now she says it's made her a better business owner, because if nothing else, you have to facilitate your staff. So does anybody have any questions about how to get one going? Things that they're stuck on, or you all got it?
I don't have a question, but I do think one of the things I really like about the mastermind model, and it's something I think about a lot because I work in the teaching space, is the idea that when we do these, when the traditional model of teaching is a hierarchical like model, right? By nature, there is one teacher who teaches every, imparts wisdom, or like is kind of elevated to this space. And what I like about these peer-to-peer models is it empowers everyone to participate. And it takes away this idea that you have to cross certain barriers before you have something to contribute, either to society or to the area that you're in. And I think about this a lot because I run a choir, right, which is a group sing process where everyone is contributing, no matter what level they're at. And it makes people sing better. When we all do it together, we all get better, whatever level we're at. So it is an interesting thing that's built into our biology. This is why choirs are so powerful, especially for beginner singers, because our biology is designed to react to each other in that way. And it's something I think about as a teacher. I think anyone who's spent a lot of time teaching understands that you learn a lot from your students. You learn a lot about how to teach, and you learn a lot about from their different perspectives. And I think kind of like flattening that hierarchy about how we learn and problem solve helps open the doors to different perspectives that might have different gatekeeping issues in terms of getting to that area where they're considered knowledgeable or a teacher. And that's something I really like. And I notice this a lot, particularly in regards to age, where like at a certain age, you're like too old to participate in things, and at a certain age, you're too young. But there are lots of people who are in their early 20s or in their late 80s who have really interesting and important perspectives to contribute to conversations. So, I mean, I think those are all strengths of the mastermind model, and I really liked watching it happen in person. I've never been in a mastermind, and I'm just looking forward to using this in future organizations. Hopefully, being able to join one day myself too. I think it's a really powerful model, and I think it's a really empowering model too.
Cool. Anybody else before we jump on to super fun financial stuff?
Yeah, I agree with everything Lee just said. Where my mind goes is adding another thing to manage.
Yeah.
I think it's tremendously beneficial. It helped me a lot, but again, my mind goes, holy moly, do I want to add another thing on my plate right now that I would potentially have to manage? And then my other thing is adapting it to the demographic that I serve. Really, truly, that's where my first instinct is. How can I take this so that this is something that's going to benefit the young people that we serve? Just teaching them this model. I think if it doesn't, even if it doesn't advance them the way they, the way it could potentially, it'll build a circle of empowerment, with each other. And like you said, it takes about a year just for everybody to get to know each other. And I think there's so much power in just having that circle where it's safe to be open about where you're challenged and where you think you're deficited and where you're strong, and then just having people that you can tag, in the areas where you need help. But that's what I think about. I don't just adapting it so that it's youth centered, particularly youth that have challenges with trust and being vulnerable or trauma informed. This would be very beneficial for them if it can be shaped in a way that we could make it work for that brand of kid.
Yeah. What I can say is I've shaped and morphed this into what I thought would be useful for business owners, for nonprofit leaders, and for people around their personal finances. But so this book has there's thousands of questions in this book. I picked the ones that I thought would be useful. I can totally see how this model could be just tweaked a little and the questions more youthful, because it's a little, it was built by a 40-something-year-old white woman. So I could see where it could be morphed. So run with it. Like this, no one owns this model. I've borrowed from many different places to build this model. It's not mine, which is why, even though it's a business line for us, I also just give it away because I don't own it. I learned pieces of it from other consultants and from this book. So happy to share it and keep it moving on out there. When I first saw your website, the Studio T Dance website, and what you were doing with the kids around, empowering them financially, it was the first thing I thought is, oh, I'd love to teach you this, but this could be a model for your kids if they're if they're engaging in entrepreneurial endeavors.
That's exactly what I think.
Yeah.
And everything that we do, like for a lot of our young people, we can't say, okay, you go to college and then you'll get a good job. Like that's not an option for them. And they're highly entrepreneurial and they're highly creative. Dance is just like our space where we show up and we get to be together and enjoy each other. But they're very entrepreneurial organically. So being able to build something that will help them tap into the emotional side, because that's really where I find the weakness. Again, self-care, that's a thing, but that's a thing because of my upbringing. That's a thing because of how I've had to live life for the past 46 years. So I understand my why behind that being a thing. And I know that if I could keep working on that thing, it'll help me, it'll propel what I'm doing business-wise. It'll propel every other area. It'll affect every other area. So I know most often with the kids that we deal with, it's not that they're not clever. It's not that they're not sharp. It's not that they don't have the ability to be entrepreneurial and successful entrepreneurial. Sometimes it's a holdback from this other thing that's lending to the stalling or the lack of growth and this other thing. And I think this would help them, and without getting too clinical,
Right.
I think this would help them.
Well, and to Emily's point, we all have a diversity of experience. Some of us, actually for a lot of years, some of my wealthiest clients were the people who had the toughest upbringing. And, I always think it's because they had to scrape and scrap and,
Yep.
just claw their way.
Yep.
And so they valued their money differently than other clients who had stuff, kind of handed-ish to them. So there's that diversity of experience is just super valuable. Everybody brings something to the table. It's not always academic. So good. All right. Well, if as you each move on through this, if you ever have any questions, feel free to pop me an email, and I'd be happy to help you on your journey with this. So who wants to do nonprofit finance 101? It's my favorite thing. All right, let me see if I can get the share to happen correctly. Maybe, oh, I know what I'm doing wrong. Hang on. Is this gonna work? Maybe. Probably gonna have to move you guys. So are you seeing yourself right now? Oh,
No, we see your screen. We see your PDF.
Okay. Oh, but not the Zoom.
Nope. Now you're on your PowerPoint.
Excellent.
Holistic nonprofit finances. Great.
So I am gonna walk you through how to make, and this is about nonprofit finance, but it's really about any small business finance. I'm a nonprofit specialist, but I also work with some small businesses, and the concept is a concept is a concept. So I'm going to teach you some of those concepts. The most important thing I want to teach you today is how to simplify your finances so that they make more sense to you, so you can make better business decisions. And so one of the first things we do when we get a new client is we start working on simplifying their financials, not making them more complicated. And shocking how many people's financials like just don't even make sense. And then after a while, you just don't really even keep them up because they don't make sense. Like, why would you spend time doing that if it's not going to help you make decisions and move forward? So I am a big believer in taking everything I've learned in my career and just saying, hey, you know what? Here's these 4 numbers that are important. And I might be exaggerating a little bit. There's more than 4 numbers, but really, I can assure you, if you had less numbers, your financials would be better. And that's what I'm gonna teach you today. Nonprofit finance is this crazy, complex thing that has to all be connected everywhere. Like, and from my perspective, the thing in the middle that makes everything else go is the money. Like, if you don't have money, you can't have staff. If you don't have money, you can't serve programs. You have to do some kind of fund development, grants, donors to even get the money. And then you have to have an operational structure around that money, or you won't even know what's there. And that's one of the things I love about nonprofits. They're complicated and they're tricky. And what I can tell you is that I have had executive directors walk in my office that run $100,000 nonprofits. And I've had ones walk in the door that run $3 million, $4 million, $5 million nonprofits. And the one thing most of them have in common is they quietly say, I don't know what I'm doing. I'm embarrassed to say, I don't know what I'm doing. And I can assure you, like, no matter where you are in your organization, if you, in its life, if you feel that way, you are not alone. I hear that from leaders of very large nonprofits. It's because we just don't have financial training. Like, no one ever teaches this. I graduated with a degree in accounting and a minor in econ. I learned all about accounting. No one ever taught me how to run an organization. I thought I could start my own business and like I'd know what I was doing because I knew how to do the accounting. Turns out that was not true. So I'm gonna teach you a little bit about how to build your financial acumen. One of the other things I always like to point out is that we don't talk about money. So what T did for us last month was, what part of why it was so impactful is because we'll talk about our nonprofits, we'll talk about our boards, we'll talk about our staff. We hardly ever talk about the money challenges with each other. And it's really a shame because we all have those money challenges, every one of us. So I'm hoping that you all walk away from this feeling a little bit more free to talk about money with your peers. And the one thing that I know is that the best time to learn, for those of you that still have pretty small organizations, best time to learn is now, before you're on this precipice. Because when you get to that precipice, like, that's a hard time to learn, you know. T, you're in that place right now where, oh wow, like, I don't really have the time to commit. I got programs I have to get out the door, but it's also, now it's time for you to become a master of this whole financial thing that's driving your organization. So I want to show you a picture of what the difference between regular financials. This is what the financials of many organizations that walk in our door. This is what their financials look like, and they just, yeah. Katie, is this what yours look like when you and I met?
Yeah, because I wanted a line item for everything. I wanted every program to have its own line item. And then I wanted subline items under all the programs because it was the only way that I felt control. And that it was overcomplicating things to the point where I was losing control.
So this set of financials on the right-hand side, that is the exact same set of numbers as the one on the left-hand side. It's the exact same set of numbers. And most, like, 90% of the organizations that I ever have a prospect meeting with, their financials look like the ones on the left-hand side, because somebody wanted to know one specific line item, like, wait, sorry. There's this one line item in the middle, taxes and licenses. It's 0 1 year and $167 in the previous year. Like, who cares? You're not making any business. My rule is, if you're not making a business decision on a line, then that line shouldn't be there. It belongs somewhere else. It belongs in something called miscellaneous. And as long as your miscellaneous is less than, I don't know, $2,000, $3,000, $4,000, who cares? You're not making business decisions. What really matters, and if you look at the one on the right-hand side, you'll see this human resources, $269,000. Like, for most of your organizations, HR is the biggest piece of the pie. And you're not spending any money that you shouldn't be spending. So you're not really monitoring off these little line items. Because you're signing a check, you're hitting a button to pay things. You're not buying superfluous stuff. So financials, financial statements are the wrong place to be monitoring what you're spending. What you really want to understand is how much money are you bringing in? What are the major sources of them? And what areas are they going out? Now, I'll show you in a minute. There's some sublines under human resource, of course, and G&A and program expenses. But if you for those of you using QuickBooks, which I'm assuming most of you are, there's a little button called condense. And so if you set up your report so you can hit the button and hit condense and print that report, like that's what you want your board reading. And that's what you want to look at. You want to look at the expanded version as well. And I'll show you that in a second. Because you do want to drill down into some line items, but we teach our clients to only have 4 major groupings for expenses. And they're usually those 4 groupings. And no more than 5 for income. And there is a reason for 5. Like for those of you that have nonprofits, you do have to get your 990 done. And for the 990, there are certain things that have to be filled in. So sometimes if you have balanced income sources, you do need those 5 because you have to report contributions, you have to report grants, and you have to report fee-for-service dollars separately. So less is more. I'm a huge believer in just building reports that matter. And instead of doing that big long report, if you're going to really invest in having more information on your reports, we like to teach people how to invest into having different buckets, basically. So T, you said you have 4 programs right now. You have 4 main programs. And so there's a way in QuickBooks to notate all of the income that comes in from a specific program, and for the expenses that are tied to one program or another. You can notate those too. We for our clients, we then do allocations, like, T's spending 25% of her time in each of those 4 programs, then 25% of her salary gets spread to those programs. What it does is, if you look at program 1, program 2, program 3, and then all other programs, the 4th line, you'll see like program 1 is supporting itself. Program 2 is actually bringing in money and funding the bottom line of this organization. Program 3, it's losing money like a mad dog, right? And so if you're not getting that view out of your financials, you want to try to slowly iterate to a way you are. Now, if you're super small and you've only got 1 main program, you don't need to do this. But if you have 4 very identifiable programs, it's really a useful way to make business decisions. Like one of our clients, they run a couple programs and they're never going to make money at it. They have to fundraise for that. But doing the reports this way helps them understand how much they need to support those 2 programs. It also helps them go out and make pleas to their donors and their grantors, like, hey, this is super important. It's not funded. We need to get it funded. And here's the identify the funding gap piece. And this is a little bit of nonprofit finance 201, but I include it because if you're not doing this, is anybody doing this yet? Kind of, sort of. You're nodding your head.
Kinda, yeah.
Kinda, sorta. It's super helpful. And if you invest your time in making sure that programmatic reporting is correct, instead of having this big, huge, long list of expenses, you're going to get more valuable information. I also think what the second bullet point here, true cost of grants. I also think it's valuable for true cost of grants, because oddly enough, a lot of organizations go out and get grants that sometimes cost them more to operate than the grant is actually giving them. So it's one way to make sure, are you writing your grants correctly? And are you, you know, are you using your internal organization's resources to fund what this grantor wants done? So does anybody have any questions about this?
How do we find somebody to help us with this? A serious
Well,
business. I feel like I've started this, but how you're breaking it down, it helps me. It helps me to see where we could identify where there's a potential hemorrhage happening, because I'll just do program because it needs to be done. And I know that I need to strengthen how I'm doing things. And I know that this will help me see what we can put more creative force behind that's working, and then kind of reevaluate what's draining, or come up with another way to fund what looks like it's draining.
Yeah, so there's a couple of things. One, I mean, I can, whoever is currently doing your accounting, there's a structure in QuickBooks called the class structure. And in that class structure, you just start coding things to your 4 identifiable programs. You don't want to create 15 programs, right? Because then you've just created this, you know, it out horizontally instead of vertically. So you start building that in. And then there's an accounting function called journal entries. And, you know, you may or may not have somebody on your team who knows how to do that, who knows how to allocate the payroll time. And that's where, to get this done, you need somebody who knows what they're doing. And it is what we do for our clients. There's other people who know how to do this. What I will say though is that there's not a lot of nonprofit specialists out there, so it is sometimes hard to find people that can help you do that maneuver. It's my dream to create how-to videos on this. I know there's how-to videos out there on YouTube.
We will totally capture, edit, and do that for you, if you would. That would be tremendous for people like me and the families that we service. I would love to be a part of helping you make that happen, if that's a possibility.
Yeah, no, it's totally a possibility. If you were on the call at the beginning, Katie was asking me, it might be my birthday today. Katie was asking me what I was doing for my birthday, and my answer was, I'm finishing the video room that I've been working on all year long to get more of these videos out. So, okay. Oh, and so there's no one way that's right. Every organization is different. You talk about having programs. Other people might have like 3 major grants. And so building this, you can do it by program, you can do it by grant. You know, there's arguments about which way is best. Every organization is different, but the structure, the underlying structure that you're building, it's all the same building blocks. For those of you that aren't leading a nonprofit right now, that you just got your own business, same thing. Katie, you know, Katie just showed us her 6 lines. Like, only one of those is making money right now, but she wants the other one to make money. And so the accounting for that is, you know, here's my 1 business line, here's my 2 business lines. Same thing. And also, if you're an event-based, you know, it all depends on where's your income coming from. Some nonprofits, their income comes out of events. So what your columns are, it just depends on what your business is. The important thing is that you want to identify where your gaps are. You want this thing to be able to give you the business decisions that you want to make. That long flowing chart of account in accounting terms, we call that chart of account creep. It happens from a bunch of different ways. QuickBooks will recommend you to start a new account for stuff. I don't know why it does that. Executive directors want easy access to key information, when really, if they just knew how to ask, hey, can you give me this other report? QuickBooks can spin off so many kinds of reports that you don't want your base financials to be muddied like that. You just have to communicate with your bookkeeper or accountant what report it is you need, and they should be able to figure it out, Google it if they have to. Those of you that have grant writers, chart of account creep also comes from grant writers, because they put in grant budgets that don't tie to your financials. So those of you that have grant writers, like, you share with them your financials and say, I want this grant budget to align with my financial reporting. Now, sometimes funders say, I'm sorry, no, you have to use these 8 lines, and those are different. And are you going to turn down a big grant just because you don't want to grow your chart of accounts? Probably not. But don't take a small grant that costs more for you to account for the grant than the money gives you. So bookkeepers, it's also really good to know there's a difference between bookkeepers and accountants and controllers and CFOs. So bookkeepers know how to pay bills, they know how to pay payroll, they know how to put the information into QuickBooks and even reconcile it. But bookkeepers are not trained to run financials. They're not trained to do journal entries. You might be really lucky and get a bookkeeper who knows how to do all that stuff, which is great, but most of them don't. And so a lot of times when we have prospects come because their finances are just out of control, it's because they thought they had somebody who could do it all, and the bookkeeper just never said, I'm sorry, I actually don't know how to do these other parts. So that's part of what happens to the expansion of, or when you're just trying to save yourself a buck, QuickBooks is super easy to use. And I think Katie will raise her hand and say, like, Katie's super smart. So she just started doing QuickBooks on her own because she could. And that worked for a while and saved you money for a while. But then at some point, the snowball rolls down the hill and it became more painful.
Yeah, I actually will say that I had huge peace of mind when we ended up creating answers. And, I've always had a DIY, like do it yourself mentality, like super hardcore, just be in the trenches and know it all and do it yourself. But like, I was messing up. And it was just like, all right, of all the things that I need to do that I'm really good at, I'm not good at this. I have to outsource it. And I have to outsource it to a professional, because it affects my board packet. It affects my funding. It affects like so many things. So yeah.
It is hard choices though. I mean, I'm certainly not saying you were wrong for doing it yourself for the first couple of years, because we're all juggling and we have to choose what that juggle is. But there definitely there's a tipping point. So I want to point out here the bottom part, the fix. So how do you fix when your financials are out of control? It's, how you eat an elephant is one bite at a time. You just have to iterate and fix one little thing, like start combining line items, start becoming more clear. That's how we do it here. We rarely wave a magic wand and just change someone's chart of accounts. We just we call it, we do 10% iteration, 10% iteration, 10% iteration. Because nobody has time to change everything all at once. Plus, it doesn't matter to everybody else, right? Like, really only matters the once a month you're really delving in and looking at your finances and making your business decisions and putting together your budget. So we're going to talk about budget next. And how many of you are annual, like December 31st is the end of your year and January 1st is the beginning of your fiscal year? So pretty much everybody. Okay. So, which means it's budgeting time. Who's working on their budget? Who has a draft of their budget? All right, he's already done. I don't see a lot of hands here. It's budget season for those of you that don't know. January is coming up. And this is our format. And Katie sent out this slide deck so you can refer to it. This is the format we use to help people build their budget. In QuickBooks, you can have them dump into Excel and you can just run a P&L by year so that you can see what has our history been. And then dump it into Excel. You can run averages. And then we have a line for suggested budget. So this gives you a view of what have you been doing and what do you think you're going to do next year. Your averages don't always inform what 2021 is going to be, but it's super helpful to see what has happened when you're making choices about what you think is going to happen. The third area is if you decide you want to do things like break this out by program or by grant, we always put that off to the right-hand side. If you have grants where you have those amounts pegged in, you can just drop those amounts right in here. Or if they're programs, you can drop your programs amounts in there and they should all total to your total suggested budget. If you look at this column number 4, or the call out number 4 here, one of the things we did for this client, all right, we've got a NASA scientist watching this presentation for her future. We dropped in the percentage of the grant, like how much of the organization is being funded by each one of their major grants. And then they were also raising money for another place. And it just helped them kind of monitor how much of each grant was impacting their organization. One of the things we always say is when you have a whale, it's a great thing as an organization when you get a whale of a grant or a whale of a funder, because you can eat on a whale for forever. But the thing you want to be careful about a whale is that a whale will eventually roll over on you. So you want to always try to get 2 whales, 3 whales, so then they kind of just become smaller fish supporting you. But that's one of the reasons we do these percentages, is just to see how much, if one of your funders leaves or one of your grantors leaves, how much is it going to impact the organization as a whole? Anybody have any questions on this one? So gathering budget information, I frequently get back from EDs budgets that they've dropped numbers into, but written no notes. And so I just want to remind everybody from when we were in school, like, do the work, show your work, show you how you came up with the numbers, because a year from now, you're having to do next year's budget and you're gonna want to remember why you built that. Like, do the math and show your math, write out specifically where that number comes from. If you're thinking you can do 10% better this year, say it's, I've just increased this line by 10% because X, Y, Z. If you already have grants, you can see on the third line here where it says committed WFF, $25,000, Cal Endowment, $50,000, US Bank, 10,000. So going into this year, this client already knew they had those commitments. So their line item was 120,000. They're guessing that they can go raise another 35,000, but it helps them know that at least all but 35 is already committed. Does that make sense? On this, even if you have the simple financials I was showing you on your budget, I do think it's often good to list out either in the budget itself or in a sub document, like every single grant that you know is going to be hitting the next year. Again, so you have something to look back on. If you're doing things like, I know some of you have, I don't know if it's membership or event fees, but to actually drill down into the math, 310 attendees, $135 a pop, like just do that math so that when you're reflecting on how your budgeting went, you're going to have that little breadcrumb trail to follow. Salaries and wages is another area that I encourage people to go ahead and list out individually in a sub budget that rolls up into your budget, and clarify every single role and what their salary is, if they're anticipated to have a raise, what that's going to be. And you'll see it's all the fringe benefit and taxes, calculating out the amounts, and then also calculating out what your total fringe benefit is. For most organizations, like by the time an organization gets to around $500,000 to $600,000 or above, your fringe benefit is going to be somewhere between 15 to 20%. And if it's not, then you want to start working on adding in additional fringe benefits to make sure that your staff sticks around. I think when you're still in your infancy, benefits are a hard thing to add. And I will say, try to add them. And I will also say, it's just hard. They're expensive. Health benefits in particular, super, super expensive.
I think our rate was, I remember it went from 14 to 17 or 18, and that was hard.
Right. Well, you kept trying.
Go ahead.
Bit by bit. Yeah. You kept trying to add things in. And it was, you did health stipends, you did. So as a way to offset some healthcare costs, and then eventually took the plunge into kind of a quasi 401k.
Yep. But my employees needed it. And I don't know. I meet a lot of executive directors that have their own health insurance wrapped up in their partner's health insurance. And so then it becomes on the nonprofit side of their employees. Like they think about it and they're like, I really want to do it, but it's almost like a privilege issue. And so I don't know, I'll just be honest. I had to come to terms with that pretty hardcore and know that, yeah, like people really need healthcare and they need to be compensated for how much they're using their cell phone for business purposes and stuff like that.
That's so true. What I think I saw one of the emails describe this session as a money mindset. And so what I will say is that when you curl your toes and do the hard thing to add healthcare or add retirement into your organization on a prayer and a hope that you have no idea how you're going to pay for it, but you know it's the right thing to do, that is the moment the money shows up. Like it will show up, because that's your new number. Super important that you budget it so that you have clarity about how much money you need to bring in, and your team has clarity about how much money. But if you don't write it down and say, this is the year we're going to do it, it won't get done, because there's so many competing demands. You know, that in the same way that I say you iterate your financials, make them 10% better at a time, you iterate your benefits and how you're raising your team's salaries and you're raising their benefits. Because you don't want people who are willing to work for less. You want people who you can support in a way that they should be supported. Some of you have this, but I have no clue how to do that look on your face. I didn't say it was easy. It's not easy. But what I will say is that I've seen many organizations take that leap, and they've always found a way to fund it, as long as the leap wasn't too big. This is just an iteration of the same one, just on the expense side, you know, writing down all of your notes and all of your thinking about where your underlying amounts come from. And I want to even show you the depth to which, if you look at the very top line, office expenses, like they took what I said to heart, and they went in and grabbed Adobe, iCloud, Constant Contact, Crystal, like, and what I will say for this particular client is that the executive director knew that they were spending $13,000 a year, and she was signing the checks, but a lot of things were coming through ACH. She kind of knew. She had no idea that somebody on her team had signed them up for Getty Images for $90 a month. Like, which, you know, I don't know, maybe $90 a month on a $600,000 budget isn't that big of a deal, but maybe it is. That's $1,000. And because that ended up on the budget, she got rid of that. So I just think it's good not just to have it on here to be able to know what the budget is, but also to look at your annual budgeting process as the moment to think about where are our resources going. And gosh, if we weren't spending $1,000 a year on images we could get for free instead of paying Getty $90 a month for them, could we buy benefits, you know, some new benefit for our staff? And also having this budget season being the time that we really delve into where we're spending our money, it then takes away from that need to have that big, huge, long vertical thing that was the first screen. Because you only really need to do this once a year and look, where am I spending my money? And is it the right places? Any questions on this? Less is more. So whatever lines you end up with on your reports, make it about determining profitability, what the true cost of grants are, identifying your funding gaps, and maybe most importantly, sustainability. So there's a a way of being in the nonprofit world that you have to pass a zero-based budget. And that is so wrong. I don't want any of you ever to pass a zero-based budget. In fact, this budget here, I think, is a $2,000 net income budget. I also don't want you passing a $2,000. Like if you have revenue of $472,000, I want you to at a minimum have 5% of that left over on the bottom line for net income, so that you can push it into reserves, or you can push it into some strategic investment in your next year. If you always have a zero-based budget, then you're just swimming here all the time. And if you trip at all, you've got nothing to save you.
Yeah, and I mean, I've been really honest, Stacey, especially with this group and in my talks about, being a founder and an executive director, like cash flow, burnout, and fear of cash flow really made me leave 916 Inc. My health, cash flow worries, and being just really burnt out and not participating in any self-care. So, and family stuff. So having reserves brought enormous peace of mind. And then when we finally got a line of credit, that also brought peace of mind. We never really had to tap, but we had to get in the mindset of building reserves. And it was super hard because it was like, oh, that's another thing. Oh, that's another thing. But you have to do it. So you have to strive for even fundraising more. So little by little, we got there.
Yeah, and if you don't set the intention in your budget, then it's probably not going to happen. I always say one of the most important things I can do for the executive directors I work with is make sure that they can sleep at night and not worry about paying payroll, because it sucks. I've never been an executive director, but I was an administrative director at an entity that had a staff of 45. And I just will never forget. Oh, there's actually a slide in here about this. I'll never forget the time that I realized the county funding didn't come on time and I wasn't going to make payroll. It's not fun, just.
Yeah, and it's like no fault of your own either. Like you have to have reserve cushion. Like I had a contract from a really reputable organization and they didn't pay for 9 months. And yeah, anyway.
So this, the big orange arrow here, it doesn't have to be zero. You don't want your budget to be zero. And you want some things below the net income line on your budget. And they aren't expense items, right? Operating reserves goal isn't an expense item. You're just going to be, if you meet that, you're just going to be moving something from cash into savings. And in the nonprofit world, on the balance sheet side, it's called moving it from unrestricted assets to board designated assets. So the things you want to add into your budget are operating reserve goals. And like I teach people with their personal finances, if the first year you do this, you have to make it $1,000, make it $1,000. If you have to make it $50, make it $50. Just put it in there. So it's the communication piece that we're going to start doing this. And maybe it's not where we want it to be, but just the fact that we're doing it, we're opening an account called reserves. We're building a reserves policy, and we're just going to start talking about reserves until we actually have money to fund the reserves. You just start doing it. Also, for those of you that have a building, sinking funds for capital repairs and improvements, very important. Most small entities, endowment is not the right thing, but for some entities, endowment is the right thing. So I just include that of things that you might want below the line. If you have a strategic investment that you want to do, like, you know, you can't get something done this year, but you want to hire a team to completely revamp one of your programs, and you just want to set aside $50,000 this year and do it next year, then that goes here as well. Anybody have any questions about this part? All right. Here's my last parting thoughts about the suggested budget. So you can see this here is like the whole big, huge ball of wax. I rarely show this whole big thing to a board. I do the condensed version for the board, but this is what, you want the budget to have a ton of information in it, and then you want to condense it down. In Excel, there's these little data groupings you can do. So with just a minus to condense the lines down. As an accountant, I of course love data, but what I'll say about your budgets, especially now that you're all growing, is that data should inform your intuition, and in the end, I think intuition trumps the data. So have the data, but it isn't really how you should be running your organization. Don't budget uncertain goals. So a lot of people will say, oh, I have a goal of 500,000, but they don't really know that they can hit 500. Don't budget for 500, but have that goal written somewhere else. Your budget should be on what you really think you can most certainly do. And your goal should be a stretch goal beyond that, but it shouldn't be a part of your budget. To the extent possible, delegate to program managers and finance staff, for those of you that have them. But as executive directors, like, read and understand every final line. Don't delegate that part. And make sure that this budget speaks to your strategic plan. Like, it should be a living, breathing document with your strategic plan. So this budget here, is just saying, like, that the other big messy one is the internal one. This clean one is what we sent to the board. It's the same exact budget, same exact set of numbers. It's just cleaner. Also, other people often want to see your budget. You often have to attach it to grant reports. Funders want to see it. Donors sometimes want to see it. You want to send them the kind of clean, condensed version. And I don't know why I threw this in here, but finance committee, I know a lot of your organizations are still small and growing, but I, of course, am a big believer in finance committee. You don't have to have a finance committee comprised of only people on your board. It's a great opportunity to invite people in that you want to vet for your board and to see how they perform and show up at the committee level. But it's a useful structure to have a group of people that can really just talk about the finances, because most board members, they don't know a lot about nonprofit finance. They don't know a lot about finance. So you don't want to spend a lot of a board meeting making decisions about numbers, but you do want a place where you can talk about that. I have a budget timeline here for you. We are all the way in December, but so just for your next year, we start budgeting process in August and get a little bit done every single month. That way we're not overwhelmed. None of our clients are overwhelmed. It also gives us an opportunity to kind of trial balloon boards. Some boards just rubber stamp it, but other boards really want to get in the weeds. And so if you can give it to them and tell them the story of the budget, but not ask them to vote on it until the next month, it's just a good strategic way. It's a strategic decision to keep them out of it, except where you want them in it. Mid-year budget modifications. I'm not a fan. I'm not a fan of mid-year budget modifications. You don't want to modify your budget throughout the year unless something drastic happens, like a pandemic. I've probably modified more budgets this year than I have like in the last 10 years. A lot of people want to modify them when they know something little has changed. And it's like, no, budgets are meant to monitor and reflect on how'd you do. But when your budget becomes meaningless because there's a pandemic, then you want to change your budget in the middle of the year. It's just a few graphs that are saying if you have somebody aboard who really loves to play with pie charts and graphs, you can get a lot of good information out of your finances that is more meaningful than the numbers I've been showing you. What this here is just showing, this organization had 5 staff people, and who paid for each one of their time that's what these colors are saying. And it's a useful thing to know, like how much of somebody's time is being funded by an external source, and then the green areas are how much they needed to raise internally to fund these positions. Other miscellaneous budget ideas. When I was saying QuickBooks can provide you so much information, your bookkeeper can actually run you a list of every single vendor you paid in the last year, and you can sort that by amount and by vendor. It's just a great time to really see where your money's going, and play with the data. Here is if you do a lot of travel, if your organization does a lot of travel, just a format you can use to roll up what your travel budget is. What's this one? How to review profitability of programs. Oh, more fun data about what this one specific grant was covering over time. The grant started squeezing this client and paying for less. And so when we went to that grantor to say, hey, you have to give us more money, we did it in this colorful chart because it just showed them you're not paying us enough money. Other little budget concepts, for those of you that are building something new, or like if you just bought a new building and you're trying to pan out what it's going to cost. Here's what I know from years of doing this. When you're building a budget on something new, a new program, a new building, anything new, you build your budget and then you multiply by 2, because it just across the board, people under budget that kind of stuff. And that might seem a little extreme, but what I can say is I've worked with a lot of organizations and a lot of budgets, and people just under budget. So if it's something that you really don't know, you're really just guessing where the numbers are, survey says you're probably going to be under budgeting. Let's talk about reserves for a minute. So this, I don't know if I mentioned last time I wrote a book on personal finance, and this comes out of my personal finance book. And it you know how you always hear we should have 1 to 3 months, or maybe even, there you go, there's the book, 1 to 3 months of expenses in savings. And then we kind of chuckle. And and it's the same thing for our organizations. By the way, 75% of Americans don't have 1 month of savings in a savings account. So if you're thinking, oh my gosh, I don't have anywhere near a month of expenses and savings, you and 75% of all Americans. But one of the reasons that we don't have it in, because none of us really truly understand how long it takes to get to what many financial advisors and what many nonprofit specialists say is having 6 months is really kind of the big goal. 3 months is great, but we just want to get to 1 month. To get, if you're saving 5%, remember I told you want to try to get to 5%, you're putting 5% of your gross away every year. If you walk this 5% grade and put 5% away every year, it takes you a year and 8 months to get to 1 month of savings for your entity. If you're trying to get to 3 years, it takes you 5 years if you're saving 5% a year. And that's if you never have to tap into it. Like that game of Chutes and Ladders, right? It's hardly ever that you put money in savings and don't have to take some out. And if you're, it's crazy. Like most small nonprofits don't ever make it to 6 months, but if that is where you're trying to go, if you put away 5% every year, it takes you 10 years to get there. And I think no one ever really does the math about how long it takes. And even, so I have this 5% grade of, if you're doing the slow 1 foot in front of the other, walk up. But those of you that want to go super fast and climb at a 20% grade, which who can save 20% of their revenue, right? But even if you did, it would still take you 5 months to get 1 month put away. And to get to the 3 month part, a year and 3 months. I mean, it just takes a long time, which is why I say start now, even if it's a tiny amount, just start walking up the mountain.
I was going to say, most of the nonprofits that I work with are pretty grassroots, some pretty much all volunteer, or they have few staff. They're all under probably 500,000, but they're more like in the 100 to 200 realm is who I kind of spent my year with. None of them really have reserves, maybe 3 weeks. Maybe I've seen one that has like about a month and a half, and that's really awesome. I'll just say it's just not a lot of people have reserves.
Yeah.
Yep.
Well, not a lot of people have reserves. Not a lot of nonprofits have reserves. Not a lot of businesses.
Yeah.
Right. It's kind of an American thing, actually. We just don't. But when we talk about letting you sleep at night, reserves are the things that let you sleep at night. So I've got a list here of strategies to build reserves. A lot of times it's just setting intention, being intentional about it. A crazy thing happened with 916 Inc. Like we started talking about it, and then, and one of our funders kind of strong-armed us and gave us reserves, but then told us we couldn't spend it on anything else. It was super painful. But
yeah,
that's what seeded 916 Inc.'s reserves.
Yeah.
And so identify donors who are more interested in your long-term sustainability than they are in your current programs. Obviously, you want more of your donors to be interested in your current programs. But if you could identify a couple of donors who that they're just giving to your sustainability, and you put that money away, it's just building blocks. To do a campaign for it, work on a policy with your board, and we've got the sample policy right here. And you just start growing a little bit at a time. And this policy, by the way, this policy is designed so that an executive director can access those reserves for payroll, but then they have to put it back. So it is meant for executive directors to be able to sleep at night and pay their staff and not ever worry about payroll.
Had to use it. Think I did it twice.
Last couple of slides, know where your organization is and where it's going. Write down your financial goals, short-term, medium, long range, communicate them with your team, talk about the finances of your organization with your team. And here's why, sustainability, the graph I'm going to show you. So fully 70, so in 1994, only 71%, I'm going to get this wrong. It's the 28 and the 29 of organizations that were formed in 1994 and 2005. By the time they got to 2015, less than 1/3 of them were still in existence. And this is a huge part of why when I talk about nonprofit finance, I talk about sustainability, because it's hard to keep a nonprofit going. And the more you focus on the sustainability, the better off you're going to be. And you know how to find us. This is just both of my organizations, Creating Answers. We do financial coaching and CFO services, and on the finance gym side, we run masterminds. So that's how you can find us if and when it's a good time to engage.
Thank you so much, Stacey. Thank you so much. I mean, we don't get this training. Nobody talks to us about this stuff. It's like, go and look at books and listen to podcasts and take people out to lunch, or, oh, my CFO does that. Okay, great. So thank you.
Was it the most fun nonprofit finance session you've ever had?
Thank you.
Someone said last time at the end of the session, like, man, sometimes by the end of these sessions, I'm just so ready for it to be done. And they were making the point that it wasn't the case with the mastermind session. So that was my goal for today. But, you know, also sometimes it is just dry stuff.
I have to say, Stacey, actually, I feel really encouraged by this particular session, because I have been making these kind of tables in like Excel for myself for the 5 years we've been running our organization. And for all those 5 years, I felt like I didn't really know what I was doing, because I was using all our financial information to help us make decisions, but I did not know how to run simple things like profit and loss. And I didn't ever learn how to use QuickBooks, because my first boss told me, don't learn how to do anything you don't want to like do more of.
Yeah.
Hire someone to enter stuff in QuickBooks, and there's never, for me, I've been trying to figure out how to close that gap between like these reports the tax people ask me for that I don't really know. I mean, I can read them, but they're not that helpful to me, like our profits and loss reports. I'm like, great, here you go. I don't use those. I use my Excel spreadsheets. So this was actually like really empowering for me, because we do this after we are an event-based organization. After every event, we evaluate what we spent money on, whether it was worth it, and what kind of profit that event brought in. And we have a series of questions and one of the questions to decide whether we want to do an event again, like, did it feed our mission? And one of those questions is, did it bring in money or pay for itself at least? And if it didn't, was its mission-based value worth it? And also, where's the money going to come from to do that next time? So we really try to build in a sustainability model to each program that we make. Where is the money going to come from up front? Because the first organization I worked at out of college closed due to financial mismanagement. And I saw everyone I worked with, and many of them were low-wage workers, lose their jobs with no notice. And I was like, I will never be in that situation where people who are in a vulnerable scenario because they're working for a nonprofit, which usually can't afford to pay a lot, are all losing their jobs. So I want to thank you for saying this, because I felt like the ding dong who's running her nonprofit, like it's her own personal finances. But I'm like, no, actually, I'm doing a good job. I am like creating these budgets, not in QuickBooks, but like with my own little arts and craft project in Excel to get this information. So I'm really feeling like empowered and excited also to figure out how to marry those two pieces together for the future, but also just feeling really good that I knew how to do that from the beginning, or guessed, I guess.
Cool. My partner is an art historian, and so, but she's also really good with numbers, but I always tell her that it's art historian math. And art historian math works, right? So you don't have to use QuickBooks. You use whatever works for you.
Well, I hired someone to use QuickBooks, so he uses it on my behalf now.
I think it's just really also just about knowing your numbers and not being scared of them. I mean, like every time it was like somebody wanted to ask me a number or why is it that way? It's just like the word why would trigger me into a place of failure, because it was like, is it not enough? Like, am I not doing it right? Am I not putting away for savings? It was just like constant defense reaction. And then it's like, no, like be empowered, know your numbers. It's not tied to your personal worth. It doesn't mean that you're failing because you're striving. Like it's just, for me, it was just so much in my head and in my mindset. So I had to see knowing my numbers as empowering and as fuel, rather than, I don't know because I'm not looking at it and I'm avoiding it and I'm going to go make an art project. So whatever number you know, that's a real number, it works.
All right. Any last questions before we get out of here? Okay. Thank you all. And T, thank you so much for your contribution to this group. It's really valuable.
Thank you. Are you kidding me? This has all been helpful to me. So no, thank you. My goodness, thank you for the opportunity. Serious business. I just know I'm going to have 18 different questions once I process what just happened.
Yeah, baby steps, one bite at a time. All right. You guys have a great rest of the day.
You too. Happy birthday.
Happy
Thank you.
birthday.
Thank you.
Birthday.
Bye, everyone.